Welcome back, everyone. We have some great housing developments going all over the place. Welcome back. And my co-host is Julie. How are you, Julie?
Fine, Seewing. Good morning.
Once again, if you are watching our channel for the first time, Julie is one of our real estate network investors within our organization. And she's among several thousand members that we have within our network, and you have purchased numerous investment properties, turnkey cash flow properties in out of state, in far away places. Even though she lives in Southern California, but it's okay. Once again, Julie, thank you so much. Julie are no different than most of you out there. You're just trying to learn what's going on in the big picture about the economy, about housing. And then once we get more educated, more informed, we can make our own decisions about whether you buy a primary home or you want to buy investment property. It's a great educational journey for Julie and everyone else watching this video. Julie?
Absolutely, 100%.
Without further ado, let's go to the first topic. We have a number of modules to discuss, so let's not waste any time. We're pulling the data from Redfin, published yesterday, December 18th, 2024. And the headline is Mortgage Rates Jump Higher After Fed Projects Fewer 2025 Cuts. So I took the liberty of highlighting some of these paragraphs because we're not going to go through every single word from this article. Just highlight the most important point, and then you guys can comment below on the description, share with us your thoughts about the information that we are presenting. Yes, that's right. Yesterday, the Fed officials cut the Fed funds rate for the third meeting in a row by 85 basis point, which will have no effect on mortgage rates as it was entirely priced in. If you look at the Mortgage News Daily, yesterday's mortgage rate increased to 7.13%.
Interesting.
This is the third time this year that the Fed cut their rates, and yet the mortgage rate went higher, right?
I thought they were supposed to correlate. Like if the Fed lowered their rates, then mortgages would go down.
It does not correlate. We are all of us in the U.S. and the consumers out there. We learning the hard way. Just because there's a rate cut by the Fed, it does not mean that the mortgage rate will goes down. Because mortgage rate, Julie, the mortgage rate are more patterns after the 10-year Treasury rate. Okay.
Got it.
Look, for you guys out there, for the foreseeable future, you will learn more about how the economy works, how the housing works, and we're here to provide those information for you out there. I've been a real estate investor for more than 20 years. I have purchased rental properties all over the country. This is what I do. By no means I'm an expert in housing. I'll just go by my vast experience in the real estate market as an investor. I'm not a realtor. I'm not here to sell you primary homes. I'm just providing you with some great value add information that you would otherwise not be able to get. I'm sharing this with you based on my vast experience of owning houses and rental properties and helping thousands of investors buy their own properties in different areas of the U.S., similar to Julie, which I helped Julie to buy multiple cash flow properties in very affordable markets in the Midwest. Anyway, so the mortgage rate went up to 7.13%. Mortgage News Daily for only people who have very good credit. However, the Fed cut that occurred yesterday by decreasing 25 basis points, the ultimate effect is long-term rates are influenced by many factors beyond the Fed policy rate, which I just alluded to. We'll dive deeper into it, not only on this video, future videos, you will learn more and more, not only about the correlations between the Fed rate and the mortgage rate, but other aspects of housing. Let's continue. The Fed expects that inflation will only decline slightly from 2.8 to 2.5% over the course of 2025. Jerome Powell, Federal Reserve, his goal several years ago was to bring the inflation down to 2%, which is a very ambitious undertaking. And he will not rest until that happens, but it ain't happening. For this coming year, 2025, for those of you that want to hope that to happen. Furthermore, so recent inflation reports have shown little progress on inflation. So as you can see right here, the inflation rate is still 2.8 to 2.5, far above the Federal Reserve's expectations. Part of the reason, Julie, is that since President Trump got elected, he created this potential for inflationary impact on any new tariffs. Any new goods that are coming from out of the country, there's a new tariff or being added on to those importing of goods, and that could have a adverse inflationary effect on the economy. So time will tell what's going to happen in the next few years because of Donald Trump. Not being political and all that, but so these two factors led Fed officials to increase their expectations for inflation at the end of 2025 from 2.2 to 2.5%. So, the first article, you have any quick comment, Julie, about that?
It's very interesting. Like you said, I was under the impression, probably like most people, that when the Fed kept their rates, that would be a win for people wanting to get mortgages, but it just showed that's just not the case. So it's very interesting that you explained that.
For those people sitting on the sidelines for the past 2 years in 2024, they want the mortgage rate to come down to below 6% so they can qualify to get a mortgage.
Right.
So they can move on with their lives. But this mortgage rate volatility in the past year, 2024, even back in 2023, has remained elevated. And when we heard about this rate cut that occurred multiple times this year, 2024, we assumed that the mortgage rate will come down accordingly, but we learned the hard way that's not happening, and that's very frustrating for a lot of. Chair Powell says we are now in a new phase where the Fed is going to be cautious about further cuts. Typically, the Fed now only expects 2 cuts in 2025. That's it. 2 cuts. This change was largely expected. It represents a considerable slowdown relative to the 100 basis point of total cuts in the last quarter of 2024.
Okay.
It is also significantly less than the 25 basis point cuts projected in their September 18th meeting recently. Based on Chair Powell's comments, future markets are taking it even further and are now pricing in only 1.25% basis cut. And finally, this last sentence, mortgage rates increased today as 10-year Treasury yields rose throughout Chair Powell's press conference. The 10-year Treasury yield is currently up by about 10 basis points, with mortgage rates up 21 basis points.
Oh, wow.
After the Fed announcement. As we conclude, my takeaway is that, you know why the mortgage rate, you know why the 10-year Treasury rate is still elevated around 4%, 4.25%? It's because of the labor market. It's because of unemployment. It's because of the economy. Because if the economy is good, if the labor market, if there are a lot of people working, if the projection by the Fed is such that the labor market is very good, the mortgage rate are not going to go down exponentially. We don't wish for bad things to happen. Only if the economy all of a sudden just
slows down. Yeah.
Go crashing or whatever, or start losing their jobs for whatever reason. The Federal Reserve has to stimulate
Right.
the economy and lower the rates, and then in turn, the 10-year Treasury will come down. The way the 10-year Treasury will come down, which will directly affect the mortgage rate coming down at the same time, is when some kind of crisis going on in the economy.
Interesting. That's very interesting. You don't want to wish gloom and doom, but that's the only thing that will stimulate them to lower the rate so that people can begin buying.
So I believe we are, as we move into 2025, we're going into a new normal. A new normal is I think the consumers out there, the potential buyers, become to since the reality
Mhm.
mortgage rate gonna continue to be elevated, you and I, we did some videos about other people's projections, many sources as we move toward the end of 2024. Last few weeks, a lot of banks they make their own housing projection, mortgage rate projection. No one have a crystal ball, right?
No.
But a lot of sources can say the housing market, the appreciation rate are going to be like anywhere from 2 to 5%, in 2025, and the mortgage rate going to be in the mid 6% to low 6% for 2025. In 2026, maybe the mortgage rate will come down below 6%. So
Right.
that is the reality. That is the expectation for anybody who is wishing for a 5% mortgage rate. It ain't going to
Right.
happen in the next couple of years, in my estimation.
I agree with you. If you're waiting for that to happen, you might be waiting a long time. That's the reason you're waiting to make a decision on investing in real estate. You're prolonging your success by trying to wait for something that may not happen.
Mhm. So, with the expectation already set, we still expect more people to come off the sidelines, especially this coming spring, 2025.
Mhm.
They want to buy houses. They want to achieve the American dream. For those that can afford it, for those that can afford the mortgage rate, a lot of them will get off the sideline. They are tired of sitting on the sideline for the past 2 years,
Mhm.
hoping the mortgage come down to 5 or 4%.
Right. It's like you missed it, and then people keep hoping it'll go back there. In the meantime, you're missing a whole lot of opportunity to get in the market.
People have go through a lot of transitions, death, divorces, job relocations, changing family dynamics. People need to buy homes, and the past 2 years, there's a lack of sales of homes, lack of inventory. The demand's very high.
Mhm.
A lot of people cannot afford to buy homes anymore because of
Right.
skyrocketing housing costs and elevated mortgage rates. So a lot of people are priced out of the market. A lot of Americans are doing that, but having said that, we still have a good percentage of people that can still qualify to get a mortgage, even at 6 to 6.5%. Those people are tired of waiting on the sideline for the past
Mhm.
years, and they gonna pull the trigger. And when they pull the trigger,
Right.
few months in the spring 2025, a lot of surge, a lot of what do you call it? A lot of
Mhm.
competition. It'll drive up prices because we still have such a massive shortage of homes available of supply.
Yeah, absolutely. The spring should be very exciting.
Yeah, the winners, the people that were willing to pull the trigger,
Making the decision. Right. Mhm.
well, good for them. The people try to time the market or whatever, and continue to stay the sideline for the next year or 2 years. They're not gonna be in a good situation.
Conversely, if you wait and then everybody starts buying, that's probably going to push the mortgage rates back up again. Supply and demand.
Well,
Mhm.
housing prices will go up based
Mhm.
on the current trends and data that we've been talking about. So
Mhm.
housing will still very resilient, and
Right.
will continue to do well in my estimation. So
Mhm. Oh, this is good information.
as we conclude this, if anyone receive any value whatsoever from this video, please like and subscribe to my YouTube channel and comment below what is the situation. Or you try to buy a primary home or investment home, or where are you located? Please share your thoughts about what we just discussed. Finally, if you have not already done so, please scroll down below this on the description on my website. If you want to become a free member of our investment network, please put your email into the entry on a website. You can potentially communicate with myself and Julie,
Mhm.
as well as several thousand of our free members, where you can learn about real estate investing.
Absolutely. 100%. Yes. We'd love to see you guys and get the information in there so we can get back and answer your questions.
Absolutely. Thank you, everyone, for watching.